Hello, I'm Anderson. I invest for myself, focused on buy and hold Brazilian and Latin American stocks. This channel is where I share my thinking, my ideas, and portfolio. I invest in hot markets from a very hot place. I live in Rio de Janeiro. Today, I will analyze JHSF, a Brazilian real estate developer that I think that the biggest opportunity nowadays in Brazil. We will apply my general rules for investing and analyze JHSF perspectives. JHSF is a company created 50 years ago in São Paulo, and that in the last 5 years did an important shift to recurring income, focused at operations in malls, restaurants, hotels, airport, and remain still with the traditional real estate operations. In the first quarter 2026, yes, the gross revenue was almost 600 million reais, growing 34% from the past quarter. So very good numbers. Well, let's see first the roles. So do I understand how the company makes money? Yes. The company makes money through a traditional real estate operation. So in general, they buy a very large land bank and develop condos. All the operations of the company are focused on high net worth individuals. That in Brazil is like 50 to 100 million reais, 10 to from 20 to 10 to 20 million dollars. Of course, to stay in a hotel is it's not necessary to have this quantity, this amount, but the amount is larger to use a private airport. In general, is a high income a company focused on high income customers. Well, so how the company makes money? They have the development, they have the hotels, it's a holding, the airport, the malls, very important malls on São Paulo city, and they have small operations in retails, especially bringing to Brazil brands like Celine or other brands that do not have operations here. So, in fact, do not have operations in Latin America, and so they try to open the first flagship in Brazil with partnership. Well, we understand how the company makes money. It's not difficult. Will people be using this product in the next 20 years? Yes, probably people will still use hotels, go to malls, and will use airport. I'm not sure if private ones, but probably, in fact, the airport nowadays is the biggest growing lines from JHSF. So, well, the company is checked on this road. The people will use the service. Does the company have a durable competitive advantage? Important question. Uh, what the company is trying to build is an ecosystem from high net worth individuals that is very powerful, but at the same time, it's very difficult to see long-term mode on hotels or restaurants, for example. It's clear that they have long-term mode to airport because it's a product, an infrastructure that's very difficult to replicate. It's not so clear to malls because if in the 20 or 30 years some neighborhoods in São Paulo city develop more, or the axis of people with more income go to another zones, they could lose some relative position. Anyway, they have an interesting competitive advantage among the high net worth individuals by the ecosystem they create. Is the company recession proof? Yes. Is the company totally recession proof because the Brazilian high income customers in general do not suffer recession. Not only Brazilian ones, in general, high income customers are more resilient to recession. Is there confidence in management? Yes, I think that the management it's a good point of JHSF because they have founders with 40, 50% of the company. This one, and this one are family. So undoubtedly, it's a risk, but it represents also skin in the game. And companies with founders, I think personally, I think that is better. I prefer this as a 100% corporation. So I see more the skin in the game part than the risks. Well, if we have invested 10 years ago 1,000 reais, we have 1,488% earnings. So very interesting growing the last 10 years for the stock. This it's especially because this company pay a lot of dividend, pay monthly. In general, pay out like 10 or more percent of the dividend yield is near than 10%, sometimes bigger than 10%. Well, let's uh, has the company been listed in the stock exchange for more than 5 years? Yes, the company is listed. I think that more than 10 years or maybe much more. And despite I said that founders control the company with more than 50%, the company is listed at Brazilian New Market. That's a segment from the stock exchange, São Paulo Stock Exchange, from the companies with better governance. So they have 100% tag along, for example, and the float must be higher than 25%. In this case, is 40%. I think that 43% is the last data. So check it. Financial roles. Has the company shown revenue growth over the last 5 years? Yes, strong revenue growth, and undoubtedly the most interesting thing on JHSF. I have here the CAGR of revenue 24%, CAGR of profit 24%, and 23.94, 24% in the last 5 years. So very interesting grow on both on revenue and profit. Has the company show earnings growth? Yes. Is the price earnings ratio low? For international viewers is extremely low. For Brazilian is low too. In general, price earnings in Brazil is like more than 8 to 12. For JHSF is low, but 1 year ago or 1 year and a half ago, you could found this price earnings like 2, 2.5, or maybe lower than 3 among several months on 2025. So it's low, but it's increasing because the stock grew a lot in the last 12 months. But it's still low, it's still checking. Does the company have consistent dividend growth? Yes, the company has the same dividend policy. So as the CAGR of profits grew 24% in the last 5 years, the dividend grew a lot. And this is very interesting because when we see dividend yield of 5%, we are seeing past dividends in 2025 but with 2026 stock price. But in fact, as the company grow like 30% yearly, so probably this dividend will be much higher. And this occur every year from since I invested in the company at least in 2023, so 2024. So uh, they pay very interesting dividend that is growing, and the future dividends probably will be better. Has the company paid more, 5% more dividends over the last 5 years? No, there are, I think that 2 years that the dividends were lower, but dividend yield, so 2025 and 2022 appear to be lower. In fact, numerically and mathematically, they are lower. But when we compare with the price stock previously, so if you stay 1 year and a half or 2 years with the stock, compare the dividend yield with this with the price you bought the stock, the dividend yield was very high. Of course, we could discuss that maybe if the dividend yield in the future become very low, and because the price of the stock increase, could be better to sell this company and buy another one with high dividend yield. But it do not appear that will occur because the profits is still growing and growing fast and growing in a huge way. Has this company been profitable for the last 5 years? Let's see. So we have here net margin from 50% on almost all years, 2022 and 2023. After COVID, they have lower margin, but anyway, very profitable company. Has the company never reported a loss fiscal year? No, the company reported a loss. I think that 2019 or 2020. It's not here in the data. But anyway, it's extreme situation, and the company never reported a loss since the shift to recurring income. What is interesting too. Does the company have a role above 10%? Yes, I think that they have. Let's see. Oh, 10.46% from all assets, from equity 27%, and from invested capital 18%. So good numbers. Is the company's debt high? No, the company debt is very, very low. Let's see on net debt with equity 0.16. So very almost indebted company. It occurred because in the last year or in beginning this year, I think that beginning 2026, the company sold 5 billion reais in projects to a bank that will operate these projects. Anyway, even with this operation, the company remain with a land bank that is several times the valuation of the company in the market. So only by the land bank, the company has a strong future upside. Does the company have debt lower than equity? Yes, much lower than equity. Let's see our projections and ideas. What the thesis? What the main investment thesis? The company is opening several units of Fazenda hotels. It's a company that is growing still growing fast on revenue. We see here. Um, well, we see here that 2023, the revenue was lower than 2021, but we need to take care because the recurring income is a different division. So it's fair to see the company as more recurring income than the one-off real estate developer. In 2021, they were they received a lot of selling of Boa Vista Village and Fazenda Boa Vista, two important condos that now is almost, especially Fazenda Boa Vista, is sold. sold out, so there is no more revenue here. And as Fazenda Boa Vista is only land, they had it's like they had a 90 80% margin. So we need to divide the company in recurring income and not recurring. In recurring income, they are growing fast every year with biggest revenue than previous one. And not recurring, we could see more fluctuations. What the projections? The projections that recurring income will reach 1 billion reais. Uh, the management was talking, I think, 1 billion from 2030, but probably they reach this number in very fast, probably 2027, because they already have 600 million, sorry, 400 million reais, and the idea is to reach 1 billion reais for quarters, but probably they will reach in 2027. So what we're seeing? We're seeing a company with recurring income that is growing very fast and very strong margins. Um, for example, gross margin here 60% on first quarter, uh, from 62% from in 2025. Okay, very strong margin anyway. And some of the business, like the airport, has a strong leverage. Once our airport is already built, to create more capacity in the airport is much easier than build a new one. So you can see, in fact, the airport movements more 18%, liters filled more 20%. So we are seeing this leverage in the recurring income from the airport. So perspective for the company. The recurring income will still grow in fast pace by several years, no doubt, include because only by the projects they are already have almost completed, like the surf club in São Paulo with the membership is like 1 million reais annually, which is very expensive to Brazilians in general. The Usina da Traição is a former dam inside São Paulo city that's now is they did a retrofit to become a mall. It's almost completed, so they are in soft opening. All the coast all the costs already appear in the numbers, but the revenue do not appear in still do not appear in the numbers. So we didn't see yet all the things that is already signed that are almost completed. We could think more 2 or 3 years growing 20-30%. And after, well, after we see a company that is bigger, that will be bigger and more resilient on recurring income. So interesting company. What is the expected for what is expected for the company in the next 2 or 5 years? Well, for me, in the next 2 years, we see numbers like 20-30% growing in income in recurring income. It's a little bit more difficult to predict the traditional real estate operations, but in recurring income, I'm for sure we'll see an increase for the next 5 years. The same, the Fazano at Milan, Italy, Fazano Cascais at Portugal, Fazano London are operations that is um, already signed and under construction. Fazano Italy, I think that we will open on 2027. This quarter is the quarter that will be open Fazano Sardenha. So it's a hotel and beach club. So we are seeing a lot of new things entering on revenue that until now that didn't appear in the revenue yet, but already appear in the costs. So positive, positive projections undoubtedly. What are the main risks and challenges? Yes, the risks. I think that the major risk is the competitors. There is no competitor in Brazil that owns the full ecosystem and focused on high net worth individuals. But we have several competitors without the ecosystem. So for malls, for example, Iguatemi malls are much more established because they have much more malls in Brazil. Some of them are upscale. JHSF only have malls at São Paulo City and São Paulo State. So in hotels, we see, for example, they competing with several international chains, both in Brazil and international destiny. Uh, I asked to IR if on international destinations for Fazano, they try to get more international customers, international hosts, international guests, sorry, or Brazilian ones, and they they do not share the uh, granular data. They say that Fazano New York, for example, 50% of the bookings are from foreigners. Okay, but it means that in a city with so many nationalities, so many tourists, 50% of the guests are Brazilians. So we could see Fazano Milan, Fazano Sardinia, Fazano London, Fazano Cascais in Portugal, two Fazanos in Punta del Este. In fact, this quarter they bought the former Conrad Punta del Este, that is an iconic hotel in South America, hotel and casino in South America. And the idea is to transform a second Fazano in the city and the first like Cidade Jardim Mall, an upscale mall on Punta del Este. But they are competing worldwide, maybe for the some Brazilian customers. I think that this is a weak point of the company to rely so much in only Brazilian customers. Um, Another challenge in risks. Well, undoubtedly the competitors, only the airport appear to be more safe of this risk. It's very difficult to create a new infrastructure from the ground. So okay, but for malls and for hotels that are a strong part of recurring revenue, recurring income, it appears to be a risk. For real estate development, well, the macroeconomic conditions is something that is important, even from high income customers, but remain a risk. And maybe again, competitors, we are seeing a lot of development of Versace and another co-branded company with Brazilian real estate developers. So JHSF do not have any any deal with these companies like Versace or Armani, Ferrari, because they are focused on their own product, the Fazano style. In fact, several projects have a Fazano inside, like the using the upscale hotel with to increase the price of the to increase the value, not the price of the apartments. But it could be it remain a risky too. Overall, the company for me is the biggest opportunity in Brazil is my biggest position. That is not bigger only because I have a limit of 20%. That in fact nowadays 24%. Um, and I think that is a company that can be a 10 bagger, like in the Peter Lynch idea of company that multiply tenfold. This one could multiply tenfold because the stock price, the price earning ratio, and because the carrying of this company is very, very interesting. Well, this is JHSF analysis. I hope you like it, and thank you.